Home sales fell 4% as mortgage rates soar. Could the housing market be cooling? Hey, what's going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and in today's video, we're going to dive into some of the stats and facts from a recent article that Redfin provided. So I'll go ahead and link to that in the show notes below. And without further ado, let's go ahead and jump right into it. All right, so the article up on the screen: home sales fell 4% in March as buying costs shoot up. The hottest March on record ended with early signs of a cool down as more buyers were edged out by soaring mortgage rates, sky-high prices, and few new listings. So let's go ahead and dig into this and see exactly what it says here. It was the hottest March ever for the housing market, with homes selling at their fastest pace and for more above list price than any other March on record. The median home sales price rose 6.2% in March. That is the fastest month-over-month gain at this time of year since 2013. It's the hottest March we've seen in nearly a decade. And home prices, of course, rose to an all-time high of $412,700 on average. Now, that is the national average here as of last month. Seasonally adjusted home sales fell 4% as soaring mortgage rates and prices sidelined more buyers whose options were severely limited due to a decline in homes being listed. So real quick, I want to touch on that. Now, I don't know if this is an inflection point or some kind of turning point in the market here, but we have obviously seen a somewhat of a rush into the market. It could be like a bit of a rate rush. A lot of folks know that interest rates are starting to climb up. Maybe they want to go ahead and lock in that 30-year fixed rate debt. So if they were sitting on the fence before, maybe that increase in interest rates have really kind of pushed them over the side and got them to get involved in this market. All right, so the article goes on to say that although pricey coastal markets begin showing early signs of a slowdown in late March, nationwide sales data for the full month reflects the hottest March on record since homes that sold last month mostly went under contract in February. We expect the combination of surging mortgage rates and record high home prices to cause more home buyers to drop out of the market. Unfortunately, homeowners are turning their back on the market too. Instead of being motivated to list before prices weaken, potential home sellers may be choosing to wait out the impending market cool down. Now, what's interesting here is that it starts breaking down some of the data. So median sales price here is on average now at just above $412,000. That's a month-over-month increase of 6.2%, but year-over-year, that's a 17.3% growth. So we've seen a tremendous amount of appreciation in home prices just over the last few years. And these numbers are pretty staggering in my personal opinion. I would say a more normalized market is probably maybe 3-4% a year on average. So year over year at 17%, it would be hard to imagine we could sustain anywhere close to that moving forward. Doesn't necessarily mean we're going to see a huge market crash, but I could see an environment where we see stagnant growth, maybe 1-3% on average or something like that. I think a lot more would have to happen to see a major deflationary event and see prices really fall dramatically from where they are today. But again, we'll have to see where the market takes us. Now it says homes sold seasonally adjusted. You had about 574,000 units. That's actually down 3.7% month over month. It's down 8.1% year over year. So total amount of homes sold or sales activity is actually down about 8.1%. I would imagine that has a lot to do with the limited amount of inventory that we're currently seeing in the market. Pending home sales, we are sitting at about 534,000 units. That's down year over year about 6.1% as well. Again, I think that is a supply issue at this point. We have seen mortgage rates shoot up, but there are still a ton of willing and ready and able buyers to come up and swoop up that inventory if it ever presents itself. Number of new listings is down a little bit. Same kind of story here. 595,000 units in March. That's down 1.1% month over month and 6.2% over the year. All homes listed for sale, 1.36 million. That's down 12.6% year over year. Median days on market, last month was just 20 days. So that means it's taken just a hair under 3 weeks to sell any property on average here across the United States. Now, year over year, that's down by about 6 days. Month over month, that's down by about 5 days. So going into the spring, it is the prime selling season. So I'm not surprised to see month over month decrease in that. But year over year, homes are selling about a week faster than they were a year ago. Moving on to months worth of supply, we're down to about 1.1 months of housing inventory. Basically, that means if nothing else were to hit the market, it would only take 1.1 months to sell everything that is currently listed and available for sale. Month over month, that's down 0.3%, and it's down 0.1% year over year. And now this one I found particularly interesting. This is the percentage of homes that actually sold above the list price. So last month, 54.3% of homes sold above the list price. So that means out of 10 listings, more than 5 properties are actually selling above the list price. Now, month over month, that number is up 7%. Year over year, that number is up 12.3%. This one here, average sales to list price, is also very telling. So average sale to list price is 102.4%. What that means is that if you have a property listed at $500,000, on average, it's selling for 2.4% higher than what it is listed for. Year over year, that is actually up 1.9%. And then here it gives the average 30-year fixed rate mortgage. What's interesting is that this data is already outdated because we have seen a major spike in interest rates. So as of March of 2022, the average 30-year fixed was sitting at about 4.17%. That is up nearly a half a point month over month, and year over year, it's up more than 8%. Now, if you were to come into April, as we're starting to head into May, interest rates are actually up a lot closer to 5%. All right, well, there you have it. That data there from Redfin I thought was really fascinating and pretty telling. We obviously have a major inventory issue, which is creating even more buyer demand there. Now, even though interest rates have gone up, nothing has really cooled down yet, aside from the pricey coastal markets here that they mentioned. But even those, I would imagine that they haven't declined or cooled down dramatically from maybe their heights or their peaks. That would be some data I'd be really interested in looking at. They just sort of referenced it kind of vaguely or generally in that actual article. So a couple things that I'm interested to find out, maybe your thoughts on it would be, with the rise in interest rates, do you think that will actually improve the inventory levels or bring a little bit more housing stock online and maybe even out the market a little bit? You know, as of right now, the data that we have actually reflects that there is less supply than there has been in the past, and people are still actively out there. They're bidding on properties. In many cases, there are multiple offers. They're driving the prices up above the actual list price. So sellers are sort of in the driver's seat. They're getting excellent prices for their properties. They're probably getting excellent terms, and buyers are still lined up trying to get involved in this market. So anyway, I'd love to hear from you. Love your thoughts in the comment section below. And if you haven't done so already, please consider liking, subscribing, and sharing this video. Thank you so much. We'll see you next time.